What's going on, EGA Tribe? Welcome back to the EGA channel where we plan to trade and trade the plan. Yeehaw! Let's get down with another daily brief here. Welcome. Before we continue, make sure you smash the like button and subscribe if you haven't already. We do this every single day for you so that you don't have to break down the markets yourself. So just want to go through a couple of things right before we get into the technical analysis. We had core CPI come out yesterday and some of the news which is relating to inflation. Saw majority of it. It wasn't really that bad. We have had expectations that inflation is going to be transitory and pretty much moving all around the place for the next couple of quarters. I have mentioned about this numerous times on this daily brief that the transitory inflation will be here to be volatile, especially since we have so many supply and production bottlenecks around the world. The big shutdown and the big recovery of this economy has been a significator for this CPI and general inflation around being higher. So we will be continuing to monitor these things. However, as mentioned on our playbook this week, I had already pretty much explained that the PMI in the US and China have been contracting, which is the producer manufacturing index, while the PMI in the Eurozone has been expanding, which signals a significant supply pressure across regions from a long shutdown that is struggling to pretty much open back up. So this is likely to continue, and we will see bottlenecks try to ring out and clear by the end of the year. But other than that, it seems like spending is healthy so far, and we see real estate valuations also pretty much in response to monetary policy pretty supported in valuation, with cash flow growth which has been pretty steady. So all in all, the macro situations have really started to pick up here in the US economy. However, this is the third week of outflows from value funds that I have been watching and tracking. So in majority of what we've been talking about here, I've been looking at reports by institutions where we've been tracking the flow of funds from various different sectors, and value ETFs saw outflows for the first time since April, and the largest outflows since mid-January. Growth ETFs saw outflows as well, and we've been seeing general inflows since mid-May. So consumer discretionary and energy were the only sector ETFs to see outflows, while tech and industrials have led inflows. So you can see that there is a sector rotation that has been strong and I think is possibly going to continue. However, we may see the sector rotation switch as we get into this new earnings season. We will be tracking how banks perform, and by I'm thinking that next week, Monday, I want to see how they collectively perform before giving you guys an update. So I will update you guys on the performance of the financial sector in time to come. In other macro news, we have mainly just the Fed's minutes kind of reflecting the reluctance for a taper to rates, because the Fed obviously believes that the economy recovery is still not underway or has not reached significant further progress. So this has sent bond yields to the floor, and sent people buying bonds because they know that the Fed is not going to taper, and so there is this reverse structure. This is the reason why you see the market having somewhat of a melt-up situation. Along with retail traders who are still positioned bearishly, and I don't expect this to slow down anytime. Let me actually have a look at that real quick and tell you guys. So I'll show you guys a chart right here in a second. So let's get into the technicals a little bit here. So you can see U.S. retail traders are still, pretty much short, right? The short to long ratio is 2:1, and this is it's going to continue to melt up. The market's going to continue to melt up, right? Because retail traders are still building shorts, and as long as they don't clear these shorts out and don't cover, and when they do cover, it's going to be an even worse situation where the market melts up even more, because the opposite of a short is a long. But remember, obviously, retail traders make a very small percentage of this pie. But still, worth noting that this is another piece of the puzzle that's causing asset prices or rather markets to be more exuberant than usual, right? And this has been a very strong update. So with SPY here, right, the SPY ETF, we spoke about these up waves. We've had very strong up waves, and now we came into the supply zone. We broke out of the supply zone, and now, as I was mentioning, in the daily brief and the H2 update yesterday, the aim was for the 61.8 fib extension at 439, and we saw a nice little correction on the CPI news for a XQs to come down and build some liquidity down here, and now we may see a continued extension to the upside, right? So we've been seeing these waves down and waves up as a very, very proper theme in this market. As long as they don't exceed 5% and they don't exceed and don't push the trend to the reverse side, we will be okay, right? So right now, as I have mentioned, this is a terrible time to be picking up overly expensive stocks. You absolutely do not want to be investing or putting money into stocks like Apple, for example, right? This is not where you want to be putting your money right now. And we'll talk about Apple in a second, but you get the idea. A lot of valuations are stretched, and we need to be absolutely careful with what you put your money in now, right? There are some companies and pockets that are undervalued, but the S&P 500 is going to chug along. We still remain bullish in a bull market. This is still a very bullish trend, and we don't see any slowing down of this momentum just yet. So we are likely to see a retest of the 38.2 and then a succession of the 61.8 at some point. Whether it's this week or next week, that's a different thing altogether. We do not know, right? And then if we move over to the QQQ, the QQQ here is already went to touch the 61.8 extension yesterday, which was this level, and we got a rejection there perfectly, which I had mentioned, right? And so now I personally feel, obviously, if we break out of this strongly, if we break out of this level strongly today, then the next level is going to be 368 here or 370, but these are going to be very strong resistance levels, right? We will need, first of all, to find support here on the 360, let's see, what is this, 365, right? 365, we need to find some support there, and then we can start to really push this higher. But if we do break out of this, it's going to be very short-lived, as I mentioned. We will see a possible breakout, but then it will very quickly get subdued back into this trend, in my opinion. So we'll be watching this for the next few days and seeing how this rally goes. Of course, bullish market, remain bullish, right? There's no point to start shorting this at all. I'm not in any short positions. I just have mini hedges with the VIX, and that's all about, right? Everything else is still long. I'm still long. Majority of my positions, all my shares are still long. Everything, I'm just waiting for valuations to just pick up. And remember, when things get exuberant, they can get really exuberant. So you want to take advantage of that. And with the Dow Jones, we saw a almost breakout yesterday, but we didn't break the all-time high on the DIA. So we will be seeing if we can actually go clinch that 350-250 level, which we were talking about in the H2 update. Then 355 and 357. This is all going to kind of matter with how banks perform this week and how the market performs in terms of earnings to see a possible sector rotation to the upside. As I mentioned, this red zone right here is a supply zone, and this zone is prone for rejection. So we have been rejected here multiple times before, and if we find support here, then we may see a leg up on the Dow Jones to break out into all-time highs. But for right now, we will play with the trend and we will see what happens. This is still in the uptrend. And as that continues, we do see possible extensions into the upside. KWEB up another 1.2% pre-market today and was up about 3% yesterday. So nice little strong bounce on the demand zone right there on KWEB. We'll see if we can break out of the $67 level. This will be a key pivot point for KWEB to break out of, because this would be the pretty much possible bullish pivot. We obviously need to still break out of $71. That will be a real bullish pivot. But let's see if we can break out of this interim first and then that later. So these are the levels that we have to watch with the Chinese equities in terms of tech. Tesla still on track in our trend here. Still performing as expected. Moved sideways yesterday and hasn't been really finding any momentum. So I want to stay out of this until momentum comes in. A break above... I want to say 700 with good volume and momentum will send this one higher, and that's when I'll start playing Tesla to the upside. So I need a break above and then a retest for me to confirm the trend here. So that's a small update on Tesla. CRM kind of moving sideways here out of this channel. I hope that we'll find some momentum up here. We'll see if we can get it. The longer that this consolidates, the more uncertain this makes me. And we'll see if we actually get a upward bullish trend here in the next coming weeks. But this one right now is not looking very good. This is a ascending wedge pattern, which is usually bearish. And if it does turn bearish, I will be cutting this position because I do have a long contract here for August, and so I don't want to hold this time value too much. I will be deciding by next week. The end of next week is when I'll decide what I want to do with this contract. And then we have CHWY with breakout and multiple retests over here. These are the few tickers that I'm going to go through with you guys today. And so CHWY found nice support above the resistance and has been consolidating there. This is a good sign. Yesterday we had multiple attempts to rally. And so I think it's setting up for a nice wave to the upside if it can hold this level continuously. So be extremely careful. Make sure you have a stop loss set, a conditional stop below $82 or so. That should be a cut pretty much. And yeah, so that's all I have for you guys on this daily brief today. The rest of the tickers we'll be watching on the Discord. We have a whole bunch of them, and we hope that you will join us on the EGA Tribe Discord community. We've been having lots of great trades posted this past week. The community is extremely active, and I thank you all for your support and watching these videos. If you do like and enjoy them, make sure you leave a like and subscribe. Thank you, and have a great day. Peace.